Hey, what's up, everybody? Welcome to this week's Real Estate Weekly Lesson. I am Greg, and I'm going to tell you on this video, and I'm going to show you how do you run comparable properties in a shifting market, in a changing market. This is a huge mistake that I see new investors and even experienced investors and real estate agents and any real estate professional make. And this is something you really got to pay attention to whenever your market is shifting. And if you don't do this, you are really going to screw your deals up, whether you're flipping them yourselves, wholesaling them to flippers. You really got to pay attention to this. So if you're not familiar with who I am, I have been a full-time real estate investor for 10 years. I've done at this point about 500 properties that have actually closed. So I got a lot of experience in good markets, bad markets, 2020 COVID craze, the high interest rate situation. I've seen a lot of stuff so far. So I have been able to adjust my offers and my numbers based on what is going on. So what do we do when the market's shifting and we still need to buy houses and we still need to wholesale houses? So what do we do? We need to really change the way that we underwrite our properties. And when I say underwrite our properties, we need to change the way that we review our numbers to determine what the property might be worth. So normally what I would tell you in a market that is increasing, going up, going crazy. So for example, back, in 2021, when the market was going gangbusters and interest rates were 2-3%, you could go off sold comps, and that was the best way to go. Because normally in that case, back, what was that, 5-6 years ago now, it's crazy how time flies. When you'd sell a property, that thing would go up in value 10-15% in 6 months. It was crazy. So you could use your sold comps to be conservative, that your new comps are going to be even higher. Like I remember, for example, I bought a property, renovated it, and sold it for $375,000. That property today is worth $550,000, and it's only been 4 or 5 years since I sold it. So that's when the market was crazy, right? There was a very, very, very limited amount of supply. There was very cheap money. You're getting a mortgage for 3%, so your payment was low. And what that was doing is, even though the payment was low because the interest rate, that was driving up the sales price, which is ultimately driving your numbers up on a house flip, right? Because if you are selling a property to somebody and instead of them paying 6% interest rate or a 6.5% interest rate, they're paying a 3% interest rate, their payment is going to be lower with the cheaper interest rate. Therefore, you can command a higher price because, that's just supply and demand, and there was no inventory for sale. So, I mean, it was absolutely crazy. And then what happened is in mid 2022, the interest rates basically doubled. And then people freaked out. The market started shifting, and people were making offers and trying to flip houses and trying to wholesale houses with comps that weren't relevant because the market shifted, especially in some areas like Arizona, Las Vegas, and Reno, and Florida. Those areas got hammered, right? They got absolutely hammered. Some of them dropped 10-15% off their peak prices. So you can't make offers based on old numbers. So what do you do? What's the tactical approach? How do you go about this? And I'm recording this video right now in January of 2026. So I'm giving you this current market situation. Let's call it maybe a flat market. Let's call it maybe a slight decline in value, but still good, market to buy and sell in if you do your numbers correctly. So first thing you want to do when you're running comps and you're running values in a flat / maybe declining market, and I'm just saying maybe because it really depends on where you are, is you don't want to really consider solds that much, right? Maybe if they're like a month old or something, but the main thing that you want to focus on, as let's just call it a house flipper here, because that would apply to a wholesaler or a landlord, because you're going to be doing the refi or whatever, is you want to look at what is the current inventory in that neighborhood, right? Or in that vicinity, depending on where the house is. Northeast, sometimes they're on busy roads and whatever. So what's the inventory look like in that, let's call it quarter mile, maybe worst case half mile radius? And what is currently available for sale? We want to look at who are we going to be competing with when we put that home on the market? What is currently active? That's the big thing you want to look at, because if you think your house is worth, let's say 500 grand, and then you go and look at the active properties nearby that are similar size, similar style, similar beds, baths, etc., and you see that there's 3 of them that are up for sale right now at 500 grand, and they've been on the market for 2+ months, well, that's telling me, or in this case, you, it might sell for 500 grand, but so far it hasn't. So if you're trying to flip homes and you don't want to sit on houses for a while, you got to lower your price, right? So you're going to want to lower that price and come on under 500 because ultimately real estate is supply and demand and the market is pretty efficient at, getting inventory sold at the right price. So in that situation, I would say, well, I don't think this is a 500 house. It could be if I'm willing to wait for 9 months, but if I'm flipping houses, I don't want to sit on a house for 9 months and have it sell. So if the properties are going at your assumed ARV or your assumed sales price, depending on your exit strategy, if you're flipping it or, wholetailing it, if you see active inventory for sale at the price you think it's worth and it's not selling and it's on the market, you're going to have to list it for less. So the first thing you got to do is you got to look at the active inventory, see what's going on. Now, sometimes what you'll see is my second point, which is you want to look at the pending sales. You want to see what is currently in motion to close, right? You want to look at what is in contract, in escrow, whatever you want to call it. And that's a really good thing you want to look at in the current market because basically actives are future, pendings are current, and then solds are past, right? So let's say that you think your property, let's say it's another property now, and you think it's a 450 property, and you see 3 properties pending at 450, which would be pretty crazy if that was the case. That's a really good sign. That's telling you and it's telling the market that at 450, this product sells at that price and there's demand pretty quickly for it. So before you look at the pending and say this is great, which most likely it is, you want to look on Redfin, Zillow, et cetera, MLS if you have it, and you want to see how long did it take to go pending. That's something that people don't realize. Even though it is pending, how long did that property take to go pending? Because if it took 6 months to go pending, that's bad. You don't want to sit on inventory for 6 months if you're paying hard money on a monthly basis. So you need to see how long that property took to go pending, which means it's under contract. So that's the second thing you want to look at. And then the third thing, and I would not put a lot of weight around this in a shifting market, is what homes have sold within the last 1 to 3 months and closed, right? Those are your closed comps. And you want to see, okay, well, let's pull 3 or 4 of them up. Let's look at them. And the main thing you want to look at is how long did it take to sell, right? If somebody listed a house in January and it closed escrow in June, that's not great, right? That's 6 months of holding costs. So what you want to look for on those sold comps, even though you want to weigh the actives and pendings more, is how long did it take to sell? Did it sell in 2 months or less? Did it sell in maybe worst case 3 months or less? Because if you see your sold comps, they got listed in January and they sold in March, that's great. That means it moved quickly. If it got listed in June and it sold in September, that's 3 months. That's not bad, right? So that's telling you that given the sold data, even though you don't want to really put that much weight behind it in a shifting market, if these properties are selling and closing and going pending and then ultimately closing escrow in 2 to 3 months, that's telling me that that market's pretty good at absorbing inventory. So the biggest thing too, when you're flipping, especially in these shifting markets, is looking at the actives and the pendings and the sold, but then also really looking at the days on market, because that's the sneaky killer in the flipping business that people don't talk about that much, is the days on the market. How long did it take to sell? Because if you have a $3,000 a month hard money payment and it takes you 6 months to sell a property and have it get fully closed, that's 18 grand in interest you're going to be paying because the market is slow. And that's something that is going to eat right into your profits. And the last thing I'll leave you with here before I wrap this video up is that a big red flag, if you're looking at active inventory, is if there's a lot of it for sale. So if you have a lot of active properties for sale in your local spot where you're doing this deal, that's not good. What that means is that if you want to stand out, obviously you got to do a good rehab most likely, but you also need to stand out on a pricing standpoint. So if you see a lot of active property at 500 and you put a decent amount of work into the house and it looks good and it's modern and whatever you're doing to make the comps, you need to say, okay, if there's a lot of 500s for sale and they're not moving, the only way you can really compete at that point, because real estate is a commodity, is price. So if you run your numbers and you're an intelligent flipper and you see before you make your offer to buy your flip that the inventory is sitting at 5, if you do a price adjustment down and mentally change your ARV from 5 to 480, that's where you're going to start to have success. And you make your offer based on the 480 number, not based on the 500 number. And then if it ultimately sells for 5, great. But if you always have your basis low and you have your sale expectations low and you list it lower, that's most likely going to be your best bet as a house flipper or as a wholesaler selling the house flippers or a landlord looking to refi properties when you need an appraisal. Be conservative with your numbers. Assume it will sell for less. And if it sells for more, be pleasantly surprised. That is a pro tip that only the people in the business doing this, like me, are going to tell you, because that is the truth. You don't want to sit on inventory. Every day you don't sell your house in the real estate business is money you're losing. Because if you borrow the money, you got daily interest. If you pay cash for the property, it's your cash tied up for another, extra couple months that you can't use until you sell the property to go deploy into another property. So always be conservative with the numbers. And hopefully this video and this podcast was helpful for you. This is a real tactical one. So hopefully you got value. Just to summarize it before I wrap the video up, you want to, number one, look at in a shifting / potentially down market, look at the actives, look at the pendings, go back only 3 months, worst case for solds. Don't go beyond 3 months. And if you see a lot of actives, that's a little bit of a red flag. So if you want to stand out and sell your property, you got to make sure there's obviously demand there. You got to lower your price. You got to, instead of thinking the ARV is 500, assume it's 480, maybe 475, 470, and then make your numbers based on that lower ARV, and you should be fine. So here's the good news. If you're in the Hudson Valley, or you're in the Seattle area, or you're in the state of Delaware, which is not a very big state, and you have a house you want to wholesale to me, I will make you a very good offer on your wholesale deal, and I will be an easy buyer to deal with if the numbers make sense. Send me an email, greg@velocityhousebuyers.com, or you can send me a message on Instagram @grego_37. I'll see you on the next Real Estate Weekly lesson. Take care.